Hello everyone, this is Dr. Jeet Singh, Assistant Professor and Head in the Department of Commerce, Mahamaya Government Degree College, Shercote. So today, dear friends, we will discuss something about market capitalization. Capitalization basically we basically refer to as amount invested in the business. We can invest amount means cash or in kind, such as land and building, plant machinery, furniture and fixtures, vehicles, etc. So whatever we invest in business, that is known as capital. Now coming on to the capitalization, it means we are going towards the share market. Cap is a short form for capitalization. It means that whatever the number of shares are there with the general public, they are multiplied by the market price per share and we get market capitalization or stocks capitalization. For example, if a share is of rupees 10 each, 10 per share, and we have 50,000 shares in the general public. So 50,000 shares multiplied by rupees 10 per share means 5 lakh becomes the market capitalization. So here you can see that market capitalization is equal to market price of the stock multiplied by the number of stocks outstanding shares. Means outstanding share means the number of shares held by the general public on that particular day and they are multiplied by the market price per share. We can take another example. If stock A has a current market price of rupees 20 per share and there are 1 lakh shares in the hands of public investors, then stock A has a capitalization of 20 lakh, means 1 lakh multiplied by rupees 20. This market capitalization increases daily. On a particular day, if share prices increases, market capitalization also increases. If share prices goes down, then market capitalization also comes down. So the company's capitalization is an effective parameter to group corporate stocks. We can divide this capitalization into three parts, or we can classify in three categories. First is small cap stocks, second is mid cap stocks, and third is large cap stocks. So first we will take small cap stocks. These are the stocks of small companies that have the potential to grow rapidly. We classify them as small cap stocks, such as startups. So the startups have a growth potential. They will grow further in coming years. But as they are growing up companies, they do not earn that much of profit. So they do not declare dividend or they do not distribute dividend to the investors in the coming years or in the early years. So if any investor wants to invest in this type of shares, in this type of companies, so they should bear in mind that they will not get dividend in coming years for few years, but there is a chances of growth and they can even outperform the other companies because they have the growth potential. So investors who can wait for or who have a long-term vision, they can invest in such type of shares. Capitalization in the range of up to 250 crores all can be classified as small cap stocks. Second one, we have mid cap stocks. These stocks are typically stocks of medium sized companies. These are stocks of well known companies recognized as seasoned players in the market. They offer the investors twin advantages. One is acquiring stocks with good growth potential as well as the stability of a larger company. Now they have come out from the small cap stock to even now they are earning good handsome profits and even now they are declaring dividends to the investors. So investors can get a dividend as well as they have the growth potential to become a large company. So generally these type of companies may have market capitalization in the range of 250 to 4,000 crores and we classify them as mid cap stocks. The last one is the large cap stocks. These are the bigger companies, the blue chip companies of the country, such as Tata Group companies, Reliance Industries Limited, certain banks such as State Bank of India, ICICI Bank of India, So these are the large companies, and over a period of time now they are earning huge profits. So they declare dividends, they distribute dividends to the investors. The advantage to the investors: number one, dividend, they get handsome dividends. Plus, they have these companies have good fundamental analysis, technical analysis are done by the investors. So there are generally investors gain in the by investing in these type of shares. They get dividends, as well as they the shares are of large companies, so there are very less risk in investing in these type of shares. The sheer volume of large cap stocks does not let them grow as rapidly as smaller capitalized companies. Means they are now earning large scale economies, and now they do not have the opportunities to grow further. They also have large cash reserves which they can distribute, which can be utilized in distributing the dividends. However, as compared to small stocks or mid cap stocks, they are distributing dividends. So now it is up to the investors, or as per their vision, okay, whether they want to invest in small cap stocks or mid cap stocks or large cap stocks. Those who want further growth, or they can wait for a few years, they should invest in small cap companies, because there are the growth potential is high in that companies. But those who want regular income in the form of dividend, they should invest in large cap stocks. So these are the three types of caps which I have discussed today. Thank you very much.